welcome on board Satyanarayana Chava, the founder and CEO of Laurus Labs, and find out how their performance has been. Mr. Chava, good to have you on ET now. Your margins have expanded sharply this time around with EBITDA around 27%. How much of this is structural, and what could be a sustainable EBITDA going forward?
If you look at the previous 2 quarters of the financial year, our EBITDA margin started improving. Even in Q3, we have done close to 26%. In Q3, we have done little over 27%. And we expect Q4 will be similar or better. And we have good visibility for next year also. EBITDA margins are going to improve from the current levels.
Right. And what about drivers for growth? What do you think is going to leverage your performance going forward?
There are 2 key drivers. The one is our sustained deliveries in CDMO segment. Clinical phase programs moving into commercial programs. That is one driver. We have good visibility on the APIs and quantities what we are going to supply in Q4 and also in the next financial year. And we also have good visibility on the other clinical programs which are moving into validation phase and also commercial phase in that segment. The prospects looks very good for the CDMOs. And the second, lot of stabilization we have seen in the ARV space, both API as well as the formulation space. In the API space, we added capacities. That's one of the prime reason our revenues went up from the previous quarters. And also there is a price stabilization in the ARV, both in the raw material front as well as the sales price. If you combine these 2 segments, contribute 70% of revenue, we see a lot of stabilization, a lot of visibility is there. That's the one which is giving confidence for us to say the Q4 will be similar or better than Q3 when it comes to margins. And also we have a good visibility on these 2 segments at least for FY27 as
well. Mr. Chava, wanted to talk about CDMO small molecule as well, because the top line or revenues there were flat both year and year in third quarter because of the campaign timing. Should we expect a strong rebound at all in Q4, or you think growth is likely to be more staggered?
If you look at 9 months of FY25 versus FY26, we have grown significantly. And even if you look at 12 months of FY25 versus 12 months including the coming quarter, Q4 FY26, we continue the same improvement in the sales. We have good visibility. We are not worrying about the quarter-to-quarter variance in the sales of CDMO. See, CDMO sales, you have to look at year on year, not just quarter-to-quarter. You have to see a 12-month period. Our deliveries has to be based on what customer needs. So we have very good visibility on this segment, not just for Q4, but also coming financial year also. We have very good visibility on this.
Right, and any update on the key product launches or approvals both in the US and EU over the next 12 to 18 months?
We supplied 3 APIs, NC APIs in the last 18 months. Out of those 3, 1 is in commercial phase right now. We are supplying commercial quantities. And we know how much we are going to supply in the next 12 months. The second one, we just got orders for commercial deliveries for next 12 months. And third one, we are expecting commercial orders. So out of the 3 NC APIs we supplied in the last 18 months, 1 moved commercial. In the next 12 months, we supply remaining 2 also commercial quantities. That's a big improvement than what we have seen in the last 12 months for these APIs. And we also have a opportunity to move from phase 3 to validation quantities for the few other intermediates and APIs. So this segment is looking much brighter than what we thought earlier.
Right, and what is the expected contribution from the dedicated CMO oral dosage facility starting June 2026?
Increasing capacity for solid oral facility by 3 billion units. Most of the capacity came online, and one more line will be online by end of March. So whole of next year, we see good ramp up will happen in the solid oral CMO opportunity for European customers. So that's going to be significant for us next year.
Right. And what's the outlook then, Mr. Chava, on Q4? What's the FY27 guidance that you'd like to give?
Very qualitative guidance we can give. See, margins are going to be attractive. And then we also expect growth in the CDMO segment is going to be significant. We are not giving any quantitative guidance right now. So things are looking bright, I believe, at this stage.
Right, Mr. Chava, good to have you on the show. Thank you so much for your time today. On that note, we're going to take a very quick break. The recovery in the market, at least, is holding